You guys can be my witness. I was very nice, okay? Because I don't want to be in the middle of the lesson and get distracted by people in the waiting room. So if I don't let them in and they get mad at me, just let them know the call is recorded. Uh, so if they're like freaking out in the chat while we're doing this call and I don't respond to them, maybe you guys can help me out, okay? All right, let's begin. Hopefully everyone has their notebooks, man. It's gonna be a big one. It's gonna be a big one, guys. All right. Okay. Hopefully you guys can see my screen, right? Okay. All right. So last class was a really long one. It was like a 3 hour class. It was the first class, so I was kind of getting, into the groove of how the pace was going to be, and everyone loved the pace. So I'm gonna keep the same pace. I'm gonna keep the same kind of breakdown style, just because everybody loved it. Nobody really complained. So today, if you guys want to like put an index at the top of the page today, you could just put like lesson number 2, basics of trading strategies and strategy building, and then you could just put trend lines. So we're just gonna keep going on trend lines right now, and we're gonna just understand a little bit of a recap from last class. So trend lines, trend shapes, recap, and then I'm gonna give you guys a little bit of sauce after how I find my favorite pairs to trade, and then we'll go into the lesson. Okay, so we'll start off with a little bit of recap. Last week we did trend lines, we did trend shapes, so we kind of went over like I'm trying to remember which pairs we did, but we did something like this, right? Hold up. We did no, it's not. See, it's crazy. I got so many charts. All right. Let's just do a fresh one. Let's do a fresh one. Let's choose this one. Okay. So last week we covered trend lines, right? We uh we said that a trend line is a line that goes through 3 points, right? Three highs, so three lows. So we essentially started off by just highlighting the lows, right? All the lows, all the different lows, all the different highs, right? That's what we did last class. So hopefully you guys did that by yourselves and got comfortable with that, because today I'm going to be showing you guys exactly how to choose the right trend line and how to make sure you're like kind of following the latest market rather than having outdated ideas, okay? So that's the whole goal with wrapping up trend lines, is like, how do I know which ones are the right ones? How do I know which ones are the ones that uh, work for me, right? So obviously, you always want to start off by kind of just roughly sketching out the main trend lines. The main trend lines that are like at the top, like at the peaks and at the bottoms, right? That's kind of like going to get you the main wave structure. And when you start on the largest time frame, you get sort of like you get a more accurate analysis of what's happening in the market. So let's say we go ahead and use like these three lows right here, right? 1, 2, and 3, right? So I'm just gonna write down, this is the 1 point right here, this is the second point right here, and this is the third, right? So this trend line right here tells us a lot. It tells us that the price is going up, right? Because it's pointing up, right? So it has an upward direction and some sort of like slope, right? So this is essentially what's happening here. You have upward direction, but it's also on a slope. So it's not exactly like a support. It's a trend line, right? It's a trend line. It's not a support. It's not a resistance. It's just a trend line. So that's what the slope means. Having a slope means it's not a support or resistance. It's just a trend line. Okay. When there's a, when it's not like fully just up. Okay. When it's like this, remember, this is consolidation. This is volatility. This is a slope. This just means that there's a trend. Okay. There's a speed to the trend. Price here 2020 was um around 9,000, right? And the price today sits at 57,000. Cool. What does that tell us? That tells us that the trend is over the last 4 years, right? Bitcoin price has increased by 48,000. Damn. What does that mean? That means that 4 years, right? And then you have 48,000. But then the trend is determined by the amount of time that it takes, which is reflected on the chart in candles. So there's a new definition here. There's candles. What are these candles? Why do we call them candles? What are these? They're just these little boxes that you see. Like when you really, really zoom in, you zoom in, you zoom in, you zoom in, you're like, whoa, dude, I see the boxes. I see the rectangles. I see them. Those are the boxes that we need to pay attention to. The secret is all in these boxes. And that's kind of what we're going to go over today. We're going to go over today, like why these boxes are green, why they're red, why they have like these like essentially like these wicks. You know, when you light your candle and this like burns, and that's like how much candle you have. And this is like the wax part. That's why we call them candles, because they kind of look like candles, right? So green candles, red candles. That's what determines, right, how many weeks we have in 4 years. Because the duration here, right, is 4 years. Right? But the amount of weeks we have is the amount of candles. So number of weeks is the number of candles. Okay. I'm going to get a pen so I can write this stuff better next lesson, but bear with me here while I write this. But this is really important, so write it down, okay? If I'm writing it down, you should be writing it down. So what is the time frame? We're going to introduce another definition here. We just introduced candles as a definition, right? We're going to introduce time frame. What is time frame? Time frame is the unit for this. So it's the unit. So we chose the weekly time frame, so the number of weeks is here. But if we chose the daily, then each candle is the number of days, right? So each candle is 1 day, 1 day, 1 day, 1 day. So when you look at the chart, when you zoom in, you're like, okay, I'm looking at the trend, I'm looking at the trend. But then you zoom in, you're like, oh, each one of these is a day. So 1 day, you see it like matches. You're like Tuesday, July 21st, right? Or 27th. 27th of July, 2021. 28th of July, 2021. 29th of July, 2021. See, each candle is like a day. Each one is 1 day, 1 day, 1 day, 1 day. Awesome. 1 hour, each one is 1 hour, right? Each candle is 1 hour. When you look at the time down here, right? You look at the time, 12 a.m., right? 1 o'clock, 2 o'clock, 3 o'clock, 4 o'clock, 5 o'clock. This is 12 p.m., by the way, not 12 a.m. It's 12 p.m., 1 p.m., 2 p.m., 3 p.m., 4 p.m. See, that's what the candles are. It's not scary. It's not scary at all. It just completely makes sense when you look at it this way, right? So that's why we call them candles. That's why there's a time frame. So you're able to analyze a trend, right? Better when you have these candles. Whether like if I have a line, like a lot of people trade this. This is a nightmare, bro. Like this is literally a nightmare. Like I don't want to look at this, right? But when I'm looking at candles, right, then that's fine. But and this is sauce right here. This is sauce. So make sure you write this down. When I'm trading crypto, and don't ask me why. Okay, if I tell you, I'd have to, you know what I'd have to do. Um, okay, guys, don't send me any requests or anything. Okay, I have the meeting companion on, so it's already taking notes. Don't worry about that. So when I'm trading candles, I always use Heikin Ashi. Okay, so write this down, like write it down on your notebook, like Heikin Ashi. And there's a lot of resources online to make you understand what it is. We really don't have time. Um, we don't have time to do that in this call. So if you want to understand what Heikin Ashi is, you can just Google it. It's not hard at all. It's just a different style of putting the candles. It reflects the volume more accurately, okay? The volume that happens in the day more accurately. So, and we'll go over that in down further in the call, what that really means, based on how these candles form, right? Whether they're red or green, what that means, and if they have a big wick or if they have a small wick here, if they have a big wick here, what it means, okay? So Heikin Ashi, that's what I use when I go on TradingView. You see the time frame, choose whatever time frame you want, right? That determines when the candles show up, and I use Heikin Ashi. Okay, very simple, very straightforward. Teaching you guys how to master TradingView. Okay, mastering technical analysis. So this is very important. So 4 years, number of weeks is the number of candles. I'm not going to get into the math right now, but that's essentially what's happening here. This is the trend, okay? So let's just put a line here. Let's put a line and just say we're looking at the chart from here. Amazing. Great. Now what? Now what do? We have to complete the trend lines, right? So we did the bottom trend line. We're gonna do the top one right now. So let's just highlight all the highs, right? I'm gonna use a green color just to make it easier, more visually pleasing. Okay, we got a bunch of highs here. Okay, all right. Obviously, I'm not gonna get all of them, but the majority of the ones that are like ranging the highest. Okay, so if we use this trend line right here, and then if we use this trend line right here, those are like probably the two highest. So these are resistance. This is technically a green line because the price is above it, and these are the red lines, right? So if we were to add some supporting lines for the support and resistance, we can see there's a resistance here, right? I'll make the trend lines a little bit thinner so you guys can understand that support is much more important than the trend lines themselves. Resistance is much more important than the trend lines. So I'm going to make the lines a bit thinner. Okay? And we're going to draw major resistance here. We got a major support here around this level here. This is a key level, major support. All right. We got another major support here. All right. And then we got one more support here. So these levels are very important. Okay. Why are they important? Because they are the levels, these lines. Remember when we said support and resistance lines are just horizontal lines that touch the most amount of points on the chart. Okay. So this is a rough drawing, but each line that I drew horizontally touches as many points as possible with the price. Price touches this line as many times as possible. So the price point of $40,000 on Bitcoin is tapped 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13, 14, 15, 16, 17, 18, 19, 20, 21, 22. You get the point. Same thing here. 1, 2, 3, right? 4, 5, 6, 7, 8, 9, 10, 11, 12, 13, 14, whatever. You get the point. Okay? Same with here. 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13, 14, 15, 16. Boom. So that's why I drew these lines, because these lines essentially are just representing where Bitcoin touches the most. And I'm trying to get the highest and the lowest points as I possibly can, right? So if I drew one more support line just to kind of cover this whole range, I would say maybe this is a support down here, okay? Around this level here. So now that I have all my support, resistance, I have my higher trend lines, my lower trend lines, now you can start to see there's a trend shape happening on the daily, okay? On the weekly too. There's a trend shape happening. And remember we highlighted the trend shape and we said, oh, how do we find the best trend shape? Well, this is the number one trend shape you're going to have. The one that you draw on the highest time frame. And the one that you get from doing what? Doing the upper trend lines, the lower trend lines, the main support and resistance. Very simple, right? So what does this tell us? This right here is a triangle. And remember what we said about triangles. We said that the price moves within them, right? So the price is likely to move within it, gonna go down. And if it moves out of the triangle, then there's volatility downward. Or if it bounces off this line and goes above the triangle, there's going to be volatility outward. And the closer we get to the end of the shape formation, right? So this is like the end, this is like the middle part, and this is the beginning. The closer we get to the end, the more volatile we're going to get. Okay? So very simple. We could do this with any pair. If you guys want me to do this with another pair, I can, but this is really, really simple. Okay? And you can kind of see like what I mean by really simple, because roughly like this is a shape down here as well. Same thing. It's obviously not exact, but it's a shape. And then the volatility broke out, you see? It broke out at the end part of the triangle. So it broke out. There was extreme volatility to the upside. Okay? So hopefully the green is not too much for you guys. Trying my best here to be organized, okay? But that's how you find the best trend line shape. That's how you find the main trend lines, is essentially just use the highest time frame, find the top, bottom trend lines, point all your supports. You got it. That's it. Nice and simple. Okay? It's not really hard at all. Now, if you want to go 15-minute, you want to go smaller time frames, you're like, Junior, I don't want to trade for the next 8 years. I don't want to know what's happening in the next 8 years. I want to know what's happening today. Okay. You zoom in, now you have like these lines. You're like, oh man, what are these lines? Okay, this is a trend line. This is a resistance. This is a support. Great. Now, what you can do is long the support, short the resistance, and it's real simple. So if you shorted here, right, 62,000, would have caught a nice short here, closed, right? Then you would have probably like been like, oh, there's a support forming here on the 15-minute. Another support. I see it, because I can put a line, and the most amount of points that it's touching is like literally here. And points, I mean like dips, like lows or highs, not just like any random point, guys. Okay? Because I could literally put it on this and say, oh, that's the support, but this is the support. Okay? And I'm gonna explain shortly what I mean by that. Because we're gonna talk about support boxes and resistance boxes, okay? Because they're not just lines, they're actually boxes. So let's draw this 15-minute support. You're like, great. But it's a resistance right now, right? Because the price is under it. So this is actually a resistance. So you see that. If you saw that, you would have shorted up here. That would have been a nice short entry right there. So we already have one short here, right? We have another short here. We have technically you would want to start shorting as it breaks. So maybe you would have shorted here, tried, got stopped out, tried again, or actually maybe you would have been greedy, right? But let's say you waited for the retest here and you were smart. You didn't see it break again. So you're like, oh, I'm not going to get in, right? So you would have avoided this loss. Then here you're like, oh, let me wait for the break and then the retest. And then, so you waited, but then it didn't really break. And then it like kind of wanted to form a support, but it failed. It broke down. You're like, oh, I'm going to wait for the retest, right? You waited a couple hours. You waited a couple hours and the retest didn't complete. But then it broke again under the resistance. Then you would have gotten an alert. If you set an alert level here, every time it breaks below 57,800, you would have gotten a second alert here, and you would have said, oh, let me check the chart. Maybe this is the completed retest. So boom, boom, boom. You would have shorted it right here, dropped, would have came back up to your entry, dropped again, volatility for like a day or two, obviously because of market imbalance, people entering. Boom, you get the move that you want. Go to support, you close it right here. Now, obviously it's going to bounce off support, whatever. Some people long relief pumps. Price moves, price moves, price moves. Okay, touches back. Now you're like, if it breaks below, then this will become a resistance and I'll catch a juicy short to the bottom because realistically, like the support is at 40K. So Bitcoin would literally tank. So now you would want to see what's going on with the price here, right? You'd want to see if it bounces. So if it bounces here, you'd be like, okay, maybe I'll catch a long, right? Maybe I'll catch a long. If you're risky, you're going to take a long right away. It's going to be like, it didn't break below. It formed a double bottom, right? Boom, boom. You would just take the range of the double bottom, right? This is the low. You'd be like, oh, I'm going to long it. This is going to be my target. And then you would open a long position, right? And I know this might be like, damn, like, how is he getting to this? I'm going to show you guys, okay? Just be patient with me. But I'm just showing you guys how a trader is supposed to think. So you would have longed it on the last low, probably put a stop loss at this low here. You would have been like, okay, I'm going to long it up to the last resistance. So this is kind of like how my brain works when I look at support and resistance, okay? I use them as points for entry and exit. But this is like a very basic strategy, okay? We're going to get into like more complex strategies. But obviously, I just want to make sure you guys understand trend lines, how they work, support, how they work, the fact that they're effective, right, to predict where the price is going to go, to predict strong rejection points, strong buying points that you can be confident in on the smaller time frames. And when you have those trend lines from the bigger time frames, it kind of gives you a little bit of confidence, right? Because let's say the price came to this resistance point here and you're like, man, I don't know what's happening. Like this doesn't feel like, it's going to stay up here. It broke above resistance and now this is not a support, right? It's not a strong support because you have to think about it. If I drew this line when this price was here, we wouldn't have all this price. So it technically wouldn't be, right? So technically the last support is here. So the price didn't form a support to be able to hold this level. So that's why it kept breaking down. It kept coming back to this resistance. It kept bouncing and coming back, coming back, bouncing and coming back. What is that? What does that mean? It means that the price is trying to form a support here. It's trying to form a support, but it's failing. It's failing to do that. It's failing to bounce off this line up to the upside. It's failing to do that, right? Like it did that here successfully and it stayed up. It stayed up for a long time. It stayed up for months, right? How many weeks was that? 1, 2, 3, 4, 5, 6, 7, 8, 9, 10. 10 weeks. 10 weeks. It bounced off the support and it stayed above it. And it's been above it since then. So this is a good support. But this right here is a good resistance because price has not been able to break above it. So that means that a downtrend is coming. Okay. I may be wrong. News can happen and change the chart any point in time. You have to be aware of that. But for the purpose of this lesson and for the purpose of understanding support and resistance, this is kind of like how we see it. If it fails to bounce off a line and reach a next level of support and form a next level of support and a next level of intense price action around that level, then it's always going to come back down to the last point. So we expect it to hover around 53 now. And if 53 fails to bounce, if 53 fails to hold and act as a support, then it's going to go back down to 40K. And if 40K fails to hold and bounce like it failed here, then we're going to go back down to this level, 32K. And if 32K fails to bounce and hold, right? If it fails to bounce and go back up, then price goes back down to 20K. This is just how it works, guys. Like, I know the price difference might be like, oh my God, what's going on? But this is just the reality. This is how trading works. You have to be realistic with yourself. You have to understand it from an unemotional perspective. I know to some people it might be like, I don't want to see Bitcoin ever go to 20,000 again, but this is just for the sake of the lesson. Don't get emotional. This could have been any other pair, right? So just for the sake of this, let's do GPY. This is why I shouldn't host these lessons at this time, but it's fine. So we're looking at US dollar and the Japanese yen, just to prove to you guys that I'm not teaching you guys some crypto exclusive stuff right now. Basic stuff, okay? Let's put the highs, right? Boom, 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 boom. How is it so far, guys? You guys have any questions? Is there anything confusing? If you guys have any questions, just let me know, please. All right? We got someone in the waiting room. Let's bring them in. Yeah. The pace is good. All right, good. All right, great. All right, so we have US dollar and Japanese yen here. That's not a crypto. But just to prove to you guys that I can find the trend on this very easily. Who knows? Red. Yeah, it's low. So the highest trend lines that we see is like right here, right? The lowest trend lines, uh, right here, right? But that doesn't give us a shape that we want, so we can extend this too. And guys, you can always extend your trend lines. Don't be scared of extending them, okay? You should want to extend them. Like, it's straightforward. But for the sake of this, let's use these right here, okay? So now you kind of see like there's more of the shape that we're looking for, the squares and the rectangles. Sorry, the rectangles and the triangles that we're looking for. So let's get some more lows here. You see how I'm using the weekly time frame? I'm using the weekly time frame to understand the trend as much as I can, right? So we got the lowest lows. Okay. So we found a shape that we want. Okay. So let's delete this one. Let's delete this one. Triangle. That's the shape that we want. Okay. And let's go ahead and draw some support and resistance lines. So, support right here. Support right here. Right. And yeah, maybe something like right here. Yeah. Yeah. So these are kind of our levels here. Um, and we could see like the price obviously created some strong supports by itself as well. Um, so since these don't have like many points, they're called what? They're called potential support and resistance. Okay, so um, I'm just gonna make them dashed. We're gonna make them dashed. Okay, potential support and resistance. And this is something new, guys. This is not like something we learned in the last lesson. So this is usually what I do when I want to trade a pair that I've never traded before, that I don't really know what's going on. So I put potential zones, and these potential zones can actually be marked by boxes. So this right here can be one box, you see, and this right here can be one box. So these boxes give me a good idea of what's happening right now. So the lines, they tell you what? They tell you what's happening long term, all time with the coin. Okay? Uh no. The I don't know what you mean by Forex TA. Just learn this technical analysis strategy and you'll be good, okay? You can apply this to any pair. Um, this doesn't matter to Forex or crypto. I could do this in crypto as well, but just for the sake of transitioning into the next part of the lesson, we're going to talk about support and resistance boxes. But for now, we're going to talk about support boxes for the purpose of this, okay? Because this shape is trending up. It's trending up. So the trend, right? This trend line is going up. So you got volatility up, and you have a trend. Number of weeks, right? And we have from 2011, from September 12th, 2011, right? Uh, $75 per Japanese, no, 75, yeah, 75 Japanese yen for $1. Now it's 140 yen for $1. So essentially, it became more expensive to buy the US dollar if you are holding Japanese yen. Okay? So that's how people trade Forex. They trade Forex based on the fact that USA is superior to Japan. It's so funny, but that's literally the reality of it. So that's how people make money on Forex. It's mind blowing. But that's kind of like why the trend is going up, okay? Just to summarize it. USA is greater than Japan. US dollar, Japanese yen is going up. Okay? That's what we're looking at here. That's the trend. But when you look at the trend, you're like, "Oh, great. What happened at these points? Price pumped. And what happened at the resistance? The price dumped. And what happened here? The resistance became a support. So that's a green line. What happened here? The resistance became a support, right? And it became a support technically here. Here it became a support. Here it tried to become a resistance, but it failed. It stayed as a support. Here it tried to become a resistance again. It failed. It became a support. Here it tried to become a resistance again. Failed, and it became a support. Then it broke above the last support. It broke above the last resistance, sliced it like butter, reached an all-time high, price discovery, right? It's still in price discovery. It's kind of coming down. But the last 2 years, the US economy compared to Japan has been booming. Okay? Booming. So that's what the price is telling us right now. Okay? The US dollar versus the Japanese yen. So this is essentially like how we should look at the markets. You got to look at the relativity between one and another. So when we look at BTC and USD, right? That means that we are looking at the strength of Bitcoin against the US dollar. How much US dollar do you need to buy one Bitcoin? So that's kind of like what we're looking at here. We're looking at how much do you need in USD to buy a Japanese yen, okay? So let's go back to the chart here. Chart. See. So it's crazy. It's right there. So this is a support box right now. That what it means is that the current trend is actually above support. So if the price comes back here, we expect it to bounce back up. Comes back here, we expect it to bounce back up. So this is a good buy zone. This is what we want to call our new buy zone right now. Okay? This is our buy zone. Buy. Okay? Now, what happens if in the next week we get a candle that takes us down here? We still buy. We still buy. Because we're expecting the price to go back up. It's in the buy zone. Come on, man. What happened the last time we came here? Pump back up. What happened the last time we came back here? Pump back up. Now, coming back here aggressively. Aggressive. So what we want to do is wait for it to really kind of form a little bit of volume in here, and we buy it, and then we wait for it to come back up. How long do we have to wait, though? How long? Well, this is where the candles come in. You see here, when it came back down, it touched first here, right? This was the first candle. But the next week was also red, and it came back down and touched here. And the next week was also red, and the next week was also red. So do we want to buy when the weekly is red? No. When do we want to buy? We want to buy when the first green candle appears. You see, because every time a green candle appears, you get like a series of a bunch of weeks. Okay? Bunch of weeks that are green. Bunch of weeks that are green. So this is kind of like how people determine when a bull run and bear market starts. Okay? It's not rocket science. It's just literally based on candle open and candle close. So write down candle open and candle close. That's going to be the first thing that we start off today with. Okay, that's the first thing in the lesson. I kind of finished the recap of the last lesson. Tried as best as I could to just zoom through it. So if you have any questions, you can just ask me, but we're going to go over support boxes and resistance boxes later in the lesson. But for the sake of the time, I want to talk about the candles. Okay, so let's get into the candles. So like I just said, if you want to determine when it's time to short, when does the downtrend start is when the first weekly candle forms. Okay? When the first weekly candle forms. So you can see here that there's an anomaly. There's a few anomalies, right? But the majority of the time when you have like a red candle, it's for a while. Okay, so you got one here, you got one here, you got one here. So then you got these few weeks where it's like just 3 weeks and then boom, it's green. So what does this tell me? This tells me that the bear market, okay, for this pair for USD and JPY lasts 3 weeks. When weak, when it's very weak, on a week, like like the strength of it, it's like low, so that's weak. Weak. So when it's weak and when it's strong, when the bear market is strong, is so lasts one, two, sorry, 1, 2, 3, 4, sorry, 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13. So about 13 weeks. Sorry, 13 weeks. And we're gonna try and do a range here. Uh, uh, let's see, 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12. Okay. 1, 2, 3, 4, 5, 6, 7, 8, 9. 1, 2, 3, 4, 5, 6, 7. So it lasts about 7 to 13 weeks. Okay, so each bear cycle that is strong lasts about 7 to 13 weeks. So if let's say like you're in a long, okay, let's say you're in a long right now. Would that be a good idea? Absolutely not. Why? Because it's still going down. Like I don't care if you're looking at the buy zone. I don't care if you're looking at support resistance. The candles matter more. You see, this is why I'm saying this is a more important call than the last time, because this is a new ingredient in the cake that we're baking. Okay, we have trend lines, we have trend shapes. Now you have a third ingredient. You got candles. Candles are the most ingredient on your birthday cake, most important ingredient. Because if you don't have candles on your birthday cake, then your cake is not presentable. No one is gonna want to eat your cake, and no one's gonna want to celebrate with your cake, and your cake isn't worth anything. You're gonna sell your cake without candles. Then why should people buy cake from you? If you don't have candles on your cake, then you're selling a worthless cake. You're selling a cake that makes no sense. Cake that cannot be used for a celebration. Cake that cannot serve a higher purpose than just pleasure of the mouth, right? So I'm using this metaphor to make you understand why candles are really important. Okay? Don't take that metaphor literally. Just candles are important. You know, imagine a cake with no candles. Like what kind of cake is that? It's a depressing cake. It's depressing, man. I don't want that. I don't want a cake with no candles, man. Please. All right. So third ingredient is candles. And candles are important because of two things: their color and the way they look. The color is determined by what? Let's write this down. Red equals uh more sell, right? Less buy. Green means more buy, less sell. Very simple. Very, very simple. All right? Doesn't mean anything else. Just the colors mean more sell. Red means more sell than buy. Green means more buy than sell. Great. And in what and how long? Okay. In time frame. And what's the time frame? The time frame is 1 week. So up here you choose your time frame. So if you want to do 1 minute, 1 minute, what does that do? The 1 minute, it does every minute. You see, look, pay attention to the time down there. Pay attention to this black box down here. Okay? Look. 25, 24, 23, 22. You see, it's per minute. So when you're looking at it, I don't recommend looking at the 1 minute. Okay, so let's just go back to the weekly. But when you're looking at it, you're looking at the volume, essentially, right? The candle is the amount of volume that's happening within that time frame. And the color, it tells you, are there more buyers or sellers? You know, the volume is exchanging of money. So people are exchanging the US dollar for Japanese yen. Exchange, exchange, exchange. Exchange, exchange, exchange. All right. That's what causes the price to go up and down. People have to trade. They have to exchange. So red means more sell, less buy. Green means more buy, less sell. Okay. So red means bad for the price. Green means good for the price. Price will go up. Red means price will go down. Great. Awesome. Now, can we make a conclusion just based off the color? Like if the candle's now red, can we just say, oh, it's gonna go down now? No, we can't say that. It's not enough. You know, you can't just look at the candle and say, oh, it's red, it's gonna go down. No, that's not how it works. That's not how trading works. Okay? It's way more complicated than that. So there's two things that make this candle important. The color, but what else? The shape. The shape. The shape is very important. Very, very important. And we're going to talk about the shape now. So there are two very, 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 very important shapes that a candle can form that give us a determination of where the trend is going to go. And we got to find these candles. So they're going to be hidden. You know, it's like finding Waldo. You got to go through the time frames and find these candles. All right. So first, you know, this is the wick of the candle. And you have a little box at the bottom here. This is called what? Called a hammer. Is that? Yes. No, no, no. This is a shooting star. Sorry. It's supposed to be in red. This is a shooting star, okay? So you see how it's like falling to the ground? See how it's falling to the ground? Right? It's falling to the ground. That's a shooting star, okay? And you see how this is like a hammer. I could use it to smack things. This is a hammer candle. We're going to make it in green. So two very important candle shapes are the shooting star and the hammer. I'm serious, guys. These are real terms. Okay? I didn't make those up. So the hammer and the shooting star, why are they important? They're important because they're essentially they determine an ultimate victory, almost like you know how we said more buys, less sells. Like essentially, buyers are fighting the sellers. Like buyers are competing with sellers to push the price up. Like buyers are buying more than the sellers are selling, and that's why the price is going up. So when the buyers are a lot, right, you get a lot of sells for the day, but then during that same week, Next day, people start buying, 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 right? This is what this is. So whatever gets canceled out here, this is the wick, and whatever stays above the open is the volume. And then at the close, so you know, this is the week start, so day one, right? And then you have obviously the week goes. Let's say the price comes back down to here. This is where it closes, so day 7. Okay, this is where it closes. So this right here essentially becomes, like, let's say it closes a bit above, like let's say it closes here, just for the sake of this example. Let's say it closes above here. Okay, this becomes the wax of the candle. This becomes the box. So whatever the difference that we added from the open to the next close is essentially the box. So what a hammer candle tells us is that during that week there was a lot of sells, but they failed to push the price down because everybody bought it, and the buyers won. They managed to mess up the sellers. There was a lot of sellers, there was a lot of people trying to sell, but the buyers bought all that stuff up and pushed the price even higher. Okay? So that's kind of what a hammer candle is. A shooting star candle is the complete opposite. So let's just run through that example one more time, just for the sake of the other, the shooting star. Okay? So the shooting star, how does it form? Okay, the week starts off great. Everyone's buying. Yes, Bitcoin's pumping. I'm going to be able to buy cigarettes this week. But then big old Chad presses the sell button, fat fingers it, and the price goes to 0. Now, obviously, the price is going to level out, right? Whatever, whatever, whatever. Let's say it stops right here. You're at a loss. You know, you long to hear. You're like, yes, I'm gonna make money. Then throughout the week, right? This is day 1. This is where the candle opened, where it formed, right? So let's say this is day 1, September 9, right? Day 7, September, what is that? 15, or sorry, 16 or whatever, right? Day 7, it closes right here. So this is gonna be your box right here. Now, obviously, like let's say it just dumped to here and then it recovered and it stopped here. This is going to be your shooting star candle. So you're going to have the wick here, which says how much got eaten up by the sellers, right? Because you bought, you longed it, and then boom, the sellers took you out. More sells came, and it dropped, it dropped, it dropped. It formed essentially a bottom here, right? And that's where it closes. On day 7, it's like it's at the bottom here. That's what it means to have a shooting star candle. It means you have a very big wick up here, and a hammer means you have a very big wick up here. So these shooting star candles and hammer, right? This is the shooting star. This is the hammer candle. They're very, very important. Why? Because they tell us that a big fight happened and someone won. Okay? A lot of ships capsized. So when we have a shooting star candle, okay, and obviously this has to be red. Usually, when you look at the chart, and you play Find Waldo, and you look for these, you'll find them to be, right? Let's find some good candles here. Let's see. So you'll see them on the regular candle formation. So you won't be able to see the hammer and the shooting star um, on Heikin Ashi as well as it is on candles. So just take a note of that. But it's not important, right? Like seeing a shooting star and hammer candle is not important. It's just like I'm explaining them to you because candles are really important. And when you're looking at candles, you have to kind of look at the chart and find where these shooting stars are, where it's happening to just kind of understand the trend. Okay, so here we have a hammer. Oh, I spot a hammer. Dad, I spot a hammer. You know, let's use it to smash stuff. No, son. If you see a hammer, you should buy the market. So this is a hammer right here. You see that, guys? It's very small. It's very like unnoticeable, but it happens. When you see these hammer candles, okay, they're very, very important. Very, very important. Remember, guys, I switched to candles, so you're not going to be able to see um, the volume analysis properly on Heikin Ashi, but I use Heikin Ashi for crypto only. Remember, guys, crypto only. I'm using USD Japanese yen right now, and candles tend to be better for finding the shooting star and on all these other patterns. But when you use Heikin Ashi, I'll explain why later on. Okay, I know it's a lot of moving pieces right now, but just bear with me. The hammer candle determines what? Determine that a big battle happened. A big battle, right? Big battle. Why did a big battle happen? Well, that's because the shape of the candle. Okay. The shape of the candle tells us what? It tells us that this is a hammer, right? It literally looks like a hammer. And it means that sellers tried to sell, but the price came back up. And then it closed here. And then it went back up. And then it went back up. And then it went back up. And then it did a little bit of correction, sell off. And then it freaking pumped, right? So hammer candles, very trustworthy. Look, you got another one here. Hammer candle. Boom. Right? Hammer candles are not red. They're green. So you got a little bit more hammer candles, hammer candle. That's bullish, man. That's where you want to be buying. That's where you want to be like happy to buy. Okay? Obviously, there are more complex patterns and candle formations and all that stuff, but let's just stay simple for now. Let's stay very, very simple. Hammers and shooting star candles, right? This is a shooting star right here. See this right here? Shooting star. Whoa, dude, that's a big, big, big wick. Like that's a big wick and a very small wax. So that's a shooting star candle right there. When you have these shooting star candles, it means that the trend is gonna reverse, right? You're gonna get downward movements. When you get those hammers, it means that you're gonna get a trend up. Okay. So an easy way to spot trends and spot like opportunities to buy is just to buy the hammer candles. Like that's another hammer candle right there. Okay. Another hammer candle right there. So if we wanted, we can go on a 15-minute and try to catch a trade right now on this pair. Right? But then you see, oh, Junior, what happened? This is a hammer candle for me. What's going on, man? I thought this was supposed to be, whatever. Like I said, this is not how you bake a cake. You don't just put a candle and say, hey, eat the cake. Brother, how am I supposed to eat just the candle and taste the cake? Doesn't make any sense. Okay, so we can't just rely on a trade just based on the candle pattern. But when you look at the weekly, you can kind of simplify the technical analysis a little bit and trust these candles more. So when you have a larger time frame, you can have very, very simple technical analysis and be right. Okay? So like we can very accurately describe the price action based on 3 ingredients. We only use 3 ingredients for the biggest time frame, and we can already take good trades, a good amount of trades, catch some juicy, juicy trades. But that's not enough. That's not enough. So what happens when we go back down to the smaller time frames? What do we have to start paying attention to? Because we have the color of the candle, we have the shape of the candle, and there are a lot more shapes, guys. A lot more shapes, and we're gonna get into those shapes. I'm gonna send you guys a sheet to memorize all the candle shapes and kind of be able to recognize patterns and stuff. And that's what we're kind of go over more in the calls in the future. But we're not gonna get into that right now. Okay, we're not gonna get into formations and patterns. That's complex stuff. We're not gonna get into that yet. We're not gonna get into patterns at all. We're only doing trend lines, trend shapes, recap today, and candles. Okay, just a basic overview of candles. So we got the shape and we got the color. What else do we need to know about the candle? Remember what I drew up here? Remember how I got to the shape, how we understood the story behind the shape? There was something that I touched on that I didn't really clarify. What was it? It was the open and the close, right? I said day 1, that's the open, day 7, that's the close. So it's another definition. Open. Started writing in my notebook, guys. See, I'm literally trying to take notes from my own lecture. Okay. Open, okay. Candle open means the first appearance of the candle. This will be price at day 1, hour 1, minute 1. Candle close equal the last second of the candle, right? Price at the last second. So the last appearance of the candle, price at the last second. This is a better definition. The last appearance of the candle. So that's essentially where, like, the candle just, like, that's it. This is where it's gonna like stop, and the next candle is gonna form. Okay. So the last appearance of the candle slash appearance of the new candle. So this is the candle close is where the new candle opens. So the next candle opens, and this is how the market goes, right? So it's a cycle. Candle opens, right? Based on the time frame that you chose, right? You're gonna have the time frame. So whatever time frame you have, right? That's 1 week right here. So after a week, the candle closes. Okay. Very, very simple. So whatever time frame we choose, that can obviously change, right? That's just based on up here what we choose. So if we choose daily, 4 hour, the candle opens, close after 1 day. If we choose the 1 hour, candle opens after 1 hour, the candle closes. So between the candle open and candle close is the battle. So in between here is the battle. The battle of what? The battle between bulls and bears. Are you following me, Captain? You still here? I hope you are. Because this is where it gets interesting. Okay? Got another and sign here, bulls and bears. Right? Last time we talked, we said what? The bulls want the price to go up. The bears want the price to go down. Okay? Very, very simple. So why are the open close important? The open and the close tell us when the battle starts and when the battle ends. Okay? And you choose. It's not like World War II. It has a set date, or it started on this day, ended on this day. No, these are you create these battles. These battles are battles because of the way you're looking at the market. Okay? So a regular person is not going to see literal bulls and bears fighting. No. We see and we say that it's a battle because of the chart. So we're looking at the chart. We look at the candle. It opens. Let's go. Let's go. It's me versus you, bro. You want to be a bull? All right, you're on my team. You want to be a bear? Let's go. Let's fight. And that's kind of like how it works. That's how trading works, right? Every single week, uh, like for example, you see like the candles, like they are on a pattern. So it's not like random. You can't choose like what day to start it on, right? So like September 2nd, that's when the last candle opened. So it's gonna close on the 9th of September. Oh shit, we're in 9th September. 9th of September, the candle opened. So the next candle closes at the next candle opens at 16th of September. So that means that this current candle will close. The current battle that we're fighting will end at 16th of September. Okay. And we'll get a new battle that starts then. So those are the weekly battles. The weekly battles are the most important battles to pay attention to. 4 hour battles are the most exciting for trading. They're the most accurate, I feel. But the weekly is honestly the most accurate when it comes to trend analysis. So when you want to see the trend, right? And you always want to trade with the trend. Always, guys, write this down. This is some gem too. And this is I like my style of teaching because I'll throw in gems like this that these become your rules, your literal like commandments. Always trade with the trend. Always trade with the trend. Never go against the fucking trend. Like you literally have to be crazy, bro. You literally have to be suicidal to trade against the trend. Always trade with the trend. Like you have to be trying like you're putting on a comedy show for God at that point if you're going against the trend. Like God is literally watching you and saying this boy is about to go broke. So always trade with the trend. Never like don't ever fucking trade something without doing this shit and seeing where the trend is going. Because if the trend is going down, right? If the overall trend is going down, or if the price and the shape is like up here, and you know that the price is gonna go down, you know this is trending up, right? You're gonna short it, but you're also gonna be careful. You're gonna be like, oh, this is kind of bullish. Like, I know it favors longs, so I'm gonna try and find some longs instead of try and short it on the weekly time frame. If I wanna, catch a short confidently, then I can either just follow the trend shape, the taps at the top, short it, short it here, whatever. But I don't recommend shorting. I don't like shorting would mean that you favor Japan over USA. Shorting this means that you want Japan to be better than USA. That's literally what it means, right? That's what it means when you're a bear, when you're shorting. But obviously, some people will say, Junior, I'm not that extremist. I'm not that extremist. I want to just short it for 5 minutes. Well, buddy, you can, sure you can, but I'm just for the purpose of this lesson, I'm trying to teach you how I get my highest level of confidence trades. So my highest confidence level trades are always trade with the trend. These are the biggest and best trades I've ever taken. So if you really want to be able to take winning trades and not waste money on fees and not waste money on anything, and you have the patience to wait for trades, just trade with the fucking trend, my friend. Trade with the trend. Okay? Like, look for longs on this pair. Look for longs. Look for longs. If you want to short it, that's completely fine. I'm not against that. But this is one major rule. Like, if you want to break the rules, that's fine. That's completely fine. I break my rules all the time. But you're not gonna have 100% win rate. Like, I break my rules because I know, like, I'm not 100% disciplined. But if you have better discipline than me, then you can follow the rules. Just trade with the trend. Literally trade with the trend and you will have 100% win rate. Like, you can never go wrong trading with the trend. Literally never. Never. You can never go wrong trading with the trend, especially if you're buying at the areas of support, man. So, now that we understand this rule, now that we understand the shape of candles, and now that we understand candle open and time frame and the fact that there's a battle going on, let's analyze something. Let's go ahead and analyze the chart. Give me some random coins, guys. Let me go and find some random coins and analyze what happened and tell you guys some stories. Any coin, type it in the chat. Whatever you guys want. and we'll take a break here in 10 minutes. Okay. That's it. Two coins. You guys don't want any other coins? Man, I've already done all these coins, bro. Like, you guys don't have like any other coins? Man, I might have to light a cigar for this shit, man. Let's do XLM. Let's do Stellar. All right. So Stellar. And I'm gonna keep it on candles just to be able to tell you guys the story, okay? Of the candle open and close. I'm gonna try and find some hammer candles and find some shooting star candles. So right here we find a shooting star candle. Okay. Uh there's not a lot of hammer candles on here. Um there's one here, right? Small hammer candle. There's one here, right? There's one here. Uh Technically this is one. Technically this is one. Um Technically this is one right here. Okay. Let's draw the trend lines real quick. So, go back to Heikin Ashi real quick. Yeah, draw some trend lines right here. Uh, this one right here. So this peak, and this peak. And now we're gonna do. You see how I'm not able to find three lows that like perfectly work. Like you want them to perfectly just tap the Heikin Ashi bottoms, right? So trend lines, I use Heikin Ashi. Just it just works, man. It just works, man. I don't know what it is with the trend lines and support on Heikin Ashi, but it just works. But when I want to find hammer candles, shooting star candles, like the big battles when they happened, right? Because that's all the shape tells us. The shape tells us that a big battle happened. Um, so that's kind of why I'm highlighting the circles, just to be able to know, like, okay, these are crucial areas where some big battles happen. So obviously here, you're like, oh, what happened? The price didn't pump. It stayed there for like months and then it pumped. Like I said, you can't just determine 100% confidence on the trend based on the shape of the candle. You have to look at the open and close. You have to understand exactly what's happening with the trend. You have to understand where the price is relative to the trend lines, right? So the price here tapped the top of the trend line, right? And it started going down. And then it came back up here, couldn't break out of the shape. So it stays within the shape. Remember, guys, we said it stays within the shape. Price always stays within the shape, right? So now that it's coming near the end of the shape, what does that mean? What does that mean? That means that we're supposed to get some volatility, right? But is the volatility going to be down? It could be down, could be up. We have to wait for the break and the retest, and then that's when we long, right? Remember what I said. We don't gamble when we trade. We find the highest probability setups, the highest win rates, and that's when we take a trade. So I would take a trade here, right, on the retest of this break. So let's say the price kind of gets volatile now, in the next week, for the sake of getting you guys a little bit excited. Let's say in the next week, all right, price starts to fly up here, boom, 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 does this, and then obviously it comes back down. You could long it on the break, but it could be a trap and actually come down. So You want to long it here, I suggest you set a stop loss like at the high of the last candle, right? So it's kind of risk free, or the low of the last candle if you want to be a little bit more lenient, or the last low. If you don't want to take a loss and you don't want to exit this long and you just kind of want to wait, right? But I think just for the sake of manipulation, if you do that, you're probably going to get stopped out and then the price will come out. That's just how the market works, guys, unfortunately. Okay, so we want to find the highest probability setups. The highest probability setup is a completed retest and a confirmation in the direction of the trend. So what does that mean? That means that Junior would not trade this right now, but Junior knows that this is gonna get volatile very soon. We're gonna get some volatility, right? Because what happens when we break out of the trend shape? What happens? What happens when we break out of the shape? Volatility. Remember? Okay, great. Now that we know now that we know this, okay, what's the trend? Trend is down. See, the trend is down. It's down. It's like this and it's like this. So what does that mean? That means I want to be looking for shorts, right? But but when you look at this and you start to say this shape is almost complete. I know some volatility is going to happen. I know something is coming. Let me try to find another shape. Maybe another shape that reflects something else. You know, maybe another shape that gives me a little bit more time. So we can do this shape right here. Okay, so let's delete this. Let's delete this trend line. And let's look at this. We got one peak here, one peak here, and one peak here, right? Okay. This line right here gives me a little bit more room. You see that? So now I get a little bit more accurate picture. Could move in the trend, could move in the shape. So if it does bounce here, if the price does come down to here, like if it does bounce up from here and it forms a green candle, then I would look to long it back up to this level. You see this trend line here? I would look back. I would look to long it back to that level. So let's go back to XRM. Let's go back to that. So I would be looking for long, which is against the trend, right? So that means that this wouldn't be my favorite coin of all time to play with, but for the sake of this exercise, you guys told me to choose this coin, so let's look at where the price is going to go for this. Let's do a quick analysis. Let's bake a cake. Let's chef it up real quick. All right, because this is the sauce that people want to pay for. People want to buy your cakes, man. Like, you want to make money? You want to sell cakes? Sell your analysis? That's what you got to learn, man. So this can be our support level, right? But I made a mistake and I didn't draw my support. I got too greedy, too confident. So let's just put a support here. Let's put another support here. Actually, this is a resistance, right? Because it's above the price. And we got another resistance here. We have another resistance here. Okay. Actual resistance. And so now that we have these levels, we can kind of understand what the hell's going on, right? So you can see it bounced nicely off the support. So we expect the price to go back up to the next level, which is 10 cents, or yeah, 10.93 cents. Okay, so $0.1091. That's where I expect the price of XLM to go to next. All right. So I'm not going to long it right away. I'm just going to wait for the weekly candle to be green, and then I'll take it. Now, based on the last few weeks, it's been like 2 weeks of green, 3 weeks of green, a failure here. So I'm expecting, you know, a big move. Maybe something like 2, 3, 4, 5, 6, 7 weeks maybe. So if the next candle comes green, then I'm gonna get excited. I'm gonna be like, yo guys, remember XLM? Let's long it. Now, obviously, if it's green here and it hasn't broken this level yet, then I'm like, it's not juicy, man. It's not where I want it to go. Like, I don't like this. But it's a good long. You know, if you want to buy it for long term, you can. Set a target at the upper resistance if you truly believe in this coin and you truly believe that it's not a Ponzi and it's not a scam. And let's check the volume. What's the market cap for it? So, market cap is 2.7 billion. Okay. And yeah, so if you guys want to find the market cap of a coin, you guys can use Coin Market Cap. I'm going to touch on this website in the end, teach you guys some sauce, how I find the best coins to trade on this website. So this is a second website. So you got Involio, you got TradingView, now you got Coin Market Cap. Okay. Just if you can like get a separate page, write down list of websites. Okay. You got Involio.com. You got TradingView.com. And you got CoinMarketCap.com. I hope you guys are writing this down because I'm writing it down too. Okay. CoinMarketCap.com. So in Volio, you find J, TradingView, find the charts. In CoinMarketCap, you find pairs to trade. And just put a star next to pairs to trade. Find the pairs to trade because I'm going to teach you guys that at the end. How I find what I like to trade for the day or for the week and so on. How I make money. All right. I'm gonna teach you guys the sauce at the end of this call. So now that I've done the analysis on XLM, very simple, 3 ingredients, right? I'm looking at the candles, looking for the hammer candles, looking for this stuff. Now I can use the open and close for the next candle. So that means that the open and close is only important when I'm looking to take a trade, not when I'm doing analysis. So now that I'm looking to take a trade on XLM, right? Which I wouldn't normally take a trade. After doing this analysis, I would be like, it's not a good coin, bro. Not a good coin to take a trade on. Personally, yes, it is kind of forming a support here and maybe it wants to break back up, but I have to wait for that. I personally, there's a lot of other coins that are much stronger, have a longer history or more strength than this coin itself. This just looks like a disaster. This looks to me like if I put my money in this, I'm never going to see my money again, right? Like just as an investor, like as an overall investor, this is what I see, okay? If some of you guys like this coin, I'm sorry, but this is just what I'm seeing, right? It's not a good chart. I'm sorry, man. It's just a horrible chart, man. Horrible chart. What the fuck is this, bro? This is a crazy chart because you got to understand, like, trend is determined by, right, the waves. Remember what I said, there's waves in the market. And I'll teach you guys some sauce right now Teach you guys some sauce. If you want to know if there's an uptrend or downtrend, okay, there's two simple metrics for an uptrend and a downtrend. So new definitions. Let's write those definitions down. Uptrend. What is an uptrend? An uptrend is when you have higher lows, higher highs forming. A downtrend is a lower high, lower lows. Very, very simple. This is like strong uptrend, strong downtrend. Okay? So in general, an uptrend is higher highs, higher lows. Strong downtrend is lower high, lower lows. What does that mean? That means that, you remember when we talked about highs and lows? This is a low, right? This is a low here. This is a high here, right? Okay, what does that mean? If I look at the low, and I'm like, okay, these are the lows, 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 lows. You see how like the lows, each low is like higher. It's getting higher and higher and higher. Do you see that? This is low number one. Then this one is higher. 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 That means that it's on an uptrend. But the downtrend starts when, obviously, if you get a shooting star candle, like that reverses, that signifies that a big battle happened, the trend is about to reverse. But to really get the confirmation that the trend really reverses, you look at the low, and then you look at the next low, and you're like, oh, this is a lower low, and this is a lower low. So that's a downtrend. But then a higher low forms, so that broke the downtrend. Okay? So here you have a low, here you have a lower low, an even lower low. So that means that the downtrend is still on. And then a lower low, and an even lower low, and a lower low again, and another lower low. But then you had like a triple bottom. So then you got a pattern formation. And like I said, we're going to study patterns and formations later in future calls. But you had a pattern formation, 3 lows at the same exact point. Boom, that's a triple bottom. Got some volatility. Okay. Also tapped the support line like 3 times. So you got huge, huge volatility. Broke through the closest support or closest resistance, went to the next level, which is 18 cents. Okay. So now, what does this tell us? What is the higher lows? What is the uptrend, downtrend? What is the point of this? Well, if we analyze the price of where it's at right now, we can just go back, right? Go back to the last low, go back to the last high, and kind of understand what's going on. So this is the last high. You got a lower high, right? This is the last low. You got another low here. Now you got another low here, right? But we need to wait for the candle close to see if it's going to go below this low or not. So if the candle closes below the last low, that means that the downtrend is continuing. So if the candle closes, if candle close is below previous low, downtrend continues. If candle closes above previous low, downtrend is done. Higher low is formed. Okay. Now, same thing for uptrend. If there's an uptrend, right, you see like here, you got a lower low, now higher low. So now there's an uptrend, right? You here you have a lower high, higher high, right? So this is kind of like essentially like a pattern guide for where the price is going to go and where you should long and sell. So you want to sell at the high, sell at the highs, buy at the lows. You only buy when the downtrend is done, when a higher low is formed. So I really want to be sure that the candle opens green and this is really the low before I buy. So I wait for the candle open to buy. So if I want to trade, if I want to buy, I have to wait for a downtrend to end to confirm that a low formed, candle color needs to change. So To make sure that a low has formed, we need to wait for the candle close and wait for the next candle open and make sure that it's green. Because if the candle doesn't open green, right? So if the candle if candle is not green and you are buying, you are trading against trend. So if the weekly trend is bearish and you long, you are trading against the trend. Does that make sense? Hopefully it does. Okay. And you can apply this vice versa. So if I want to sell, right, I have to wait for the uptrend to end to confirm that a high formed. Candle color needs to change to red here. Candle needs to change to green. Okay. And then obviously same thing. If candle is not red yet and you are selling, you are trading against the trend. So just, basic analysis. This is literally basic. So basic. But it's so crucial. Like if you don't do this, like before you trade something and you don't get familiar with it, then you're never going to be expert at that pair. You're never going to understand what it is. You're never going to be able to determine whether this is good or no, whether you're taking high confidence trades or low confidence trades. So high confidence trades is trading with the trend, right? That's why we have a rule. We made a rule that says always trade with the trend, right? And a strong uptrend means higher lows, higher highs. A strong downtrend means lower highs and lower lows. If you want the best technical analysis, you use the highest time frame. Awesome. Awesome. This is great. Covered a lot. So let's take a break. Okay. Let's do a 15-minute break. And then we'll do maybe another 30 minutes. All right. So we'll take a break now. A bunch of students are coming in. I'll just let them in from the waiting room. Play some music. Go get some food. Go get some rest, whatever. Come back in 15 minutes. 12:30. Okay. If you guys have any questions, I'll be here to answer any question. But let's stop here. Give you guys kind of a break. This is a lot of information. And let's come back in a little bit, okay? All right, guys. Hey, what? This is the shit that my daddy raised me on. Niggas got lit off the features I skated on. I gotta know how you get lit off the nigga you hating on. Numbers untouchable, they got the data wrong. This is the moment I know they've been praying on. Try not to boy out, but fuck it, I'm staying.